Okay, the market is down, what, 78 odd points, 12,052 is where we're at. Godrej Consumer reported third quarter numbers. Internals were weak. The India business revenues grew just about 1%. Overall growth was led by Indonesia. My colleague Priya Sheth caught up with Samir Shah, head of finance for India and SAARC at Godrej Consumer, started by asking him about the key pressure points that he sees in the business going forward. Listen in.
In an environment, especially in India, where we have seen incremental deterioration in HPCL, FMCG space, the volume growth of 7% for us is quite, satisfying. It's quite broad-based. We have seen this driven by innovations and, tactical consumer offers and price offs. This gap between value and volume, my sense, is going to converge starting this quarter itself, driven by premiumization, driven by select pricing increases. So we will see this 1% value growth in India to begin with, sort of moving up in short term. If you look at international business, the growths have been relatively stable. In Indonesia, we did see a 9% constant currency sales growth and a 13% value growth, continuing its good growth momentum. In Africa, US market, we have seen sequentially improving sales growth of around 6% constant currency, and we would want to sort of build and continue on that trend. So for us, sequentially, we have seen a value growth. In India, the focus till last few quarters has been more of driving a stronger volume growth. We will build on that volume growth. We have gained volume market shares, and now we will see even value growth sort of moving up.
So for the last 2 quarters, you've seen a 7% kind of volume growth that's come about. Do you think that this kind of volume growth is sustainable? What is a comfortable band in terms of volume growth that you're working with?
Yeah, I think the objective would be to sort of maintain this range of anywhere between 4, 5, 6, 7% volume growth. We'll definitely need some favors from macros to sort of build on this volume growth. We had stated this at the beginning of the year. There is a playbook to sort of get volume franchisee, build on this volume franchisee through premiumization, pricing change, and get value growth. So I think we are now at the turnaround point in terms of getting the value growth, but definitely it has to be backed by volumes. I mean, it cannot be all driven by just a plain vanilla pricing or premiumization growth. So we should see, at least a mid-single digit, volume growth continuing, and then you top it up with a pricing-led, premiumization-led growths to see a very healthy value growths in medium term.
All right, talk to me about the rural-urban divide. We've seen, rural not performing very well over the last couple of quarters, but do you see that the differential has come down between rural and urban?
It has. It's like 0.6x, 0.7x at this point in time over last 2 quarters, from what it used to be 1.4x or 1.5x over last 5 to 6 quarters. So definitely there is more pain in rural.
Okay, so that's Godrej Consumer talking to CNBC TV18. The stock is under pressure, down around 6% giving company to a couple of other result reactions such as IDFC First Bank, which is down around 5.5% as well. Watch out for a couple of other